Hello friends. Friends, we will continue with dissolution of partnership. Right? Dissolution of partnership firm. Right? So I told you that what is dissolution? That we are closing down the partnership business. This can be for any reason. One of the partner has died, or it can be compulsorily by law, or it can be by the mutual agreement between the partners. Right? So there can be more reasons like that. Then we discussed, I told you a story that you move from a rented accommodation to your own house that is fully furnished. Now the assets that you are having in the rented accommodation, you decide to sell those assets, and from the money realized you will pay the liabilities. Then we discussed about section 48 of Indian Partnership Act 1932, which gives the order in which the liabilities are to be paid. Right? This section says that first of all you have to pay the outsider's liabilities, then pay the partner's loan, then pay the partner's capitals, and then if anything is left, that is to be distributed among partners in their profit sharing ratio. Clear this much? And in the last lecture, we started with accounting treatment. In the last lecture, we started with accounting treatment of dissolution. Right? In the accounting treatment, we started with preparing realization account. Right? What is a realization account? When you decide to close down the business and you have decided to sell your assets, you transfer the assets to the realization account. We transfer assets and liabilities to realization account. Right? We haven't sold the assets here. Be careful one thing, friends. When we are preparing the realization account, we are transferring the assets and liabilities. We haven't sold the assets and liabilities. Right? We are yet to sell those assets and liabilities. It is just we have decided that we are closing down the partnership firm, we are dissolving the partnership firm, and we have decided that we will sell the assets and we will settle the liabilities of the partnership firm. For that purpose, what we do is we transfer the assets to realization account, we transfer the liabilities to realization account. Then we discussed about the few points to be remembered while treating the assets. The one thing was, if there is any provision relating to asset appearing in the books, that provision will also be transferred to realization account. One was related to provision, and the other was if there are any fictitious assets appearing in the book. Fictitious assets like accumulated losses, advertisement expenditure, advertisement suspense account. Right? If there are any fictitious assets that are appearing in the books on the asset side of the balance sheet, then these assets will not be transferred to realization account. These assets will be transferred to partners' capital accounts. Clear, friends? Then talking of liabilities, we discussed that liabilities, only outsider liabilities will be transferred to realization account. Liabilities relating to partners' loan and partners' capital will not be transferred to realization account. Clear this much? Right? Now in this lecture, we'll discuss about one specific liability, that is workmen compensation. Workmen compensation reserve. Clear? We'll talk about workmen compensation reserve. Clear, friends? Now, what is this workmen compensation reserve? we have been doing this topic from the last 3 chapters: change in profit sharing ratio, admission, retirement. In all the chapters we have done this. This reserve is created to meet any future contingencies, related to workers, right? You have many workers working in your factory, right? You create this workman compensation reserve to meet any future contingencies related to workers. That means in future, if any worker gets injured while working in your factory, then you are liable to bear his medical expenses. Is this right? In future, if any of the worker gets injured while he is working in your factory, you are liable to meet his health, his treatment expenses. For that purpose, what we do is we create one workman compensation reserve, right? So that in future, if we need to spend on this, we will use this workman compensation reserve first. Then if any other amount is required, that will be taken out of profits, right? So in case of any contingency related to the workers, if any of your worker gets injured during the working time, you are liable to meet his expenses. For this purpose, we create workman compensation reserve. Now, how to treat this workman compensation reserve in case of dissolution? That is the point. Whether we will be transferring this to realization account. Now there can be 4 cases, right? Case 1, there is no liability against workman compensation reserve. That means no worker gets injured, there is no liability against workman compensation reserve. Whatever reserve, whatever amount you have set aside as reserve, that is laying as such, there is no liability as of now on the date of dissolution, right? So what will you do is, the whole of workman compensation reserve account debit, you will transfer the whole reserve to partners capital accounts. Clear? You will transfer whole of the reserves to partner capital accounts because reserves are nothing but the part of profits only. Clear? So we will transfer the whole of workman compensation reserve to partners capital accounts. Case 2. Amount of liability is less than workman compensation reserve. This was no liability. This is amount of liability is less than workman compensation reserve. Suppose you have a workman compensation reserve of 75,000, right? And during the year you have a liability, that is till the date of dissolution, you have a liability of 20,000. What is the remaining reserve? 55,000. That means one of your worker got injured during the working hours and the expenses on in treatment were 20,000. Now you have to pay him 20,000. There is a liability of 20,000 with regard to workman compensation. So what will be the journal entry in this case? In this case, our journal entry will be workman compensation reserve account debit. Clear? This will be 75,000 to realization account. In the realization account, we'll take only the part of liability and the remaining reserve will be transferred to partners capital accounts. 55,000. Clear, friends? So to the extent of liability, we will transfer workmen compensation to realization account, and whatever balance reserve is appearing in the balance sheet, we will transfer that to partners' capital accounts. Clear these two cases? No liability, we will transfer the whole of reserve to partners' capital accounts. If amount of liability is less than workmen compensation reserve, then the amount of liability will be transferred to realization account and the remaining will be transferred to partners' capital accounts. Now, third case. Third case is amount of liability is equal to workmen compensation reserve. That means if you have a workmen compensation reserve of 75,000 and during the year 2 of your workers got injured, you have a liability to incur the expenses on their treatment amounting to 75,000. So is there any workmen compensation reserve remaining? Nothing. Right? So what will be the journal entry? If you can see the above also, whatever the amount of liability is, we have transferred it to realization account. Now here the liability is equal to workmen compensation. So that means I can say workmen compensation reserve account debit to realization account. What is transferred to realization account? The amount of liability, that is 75,000. What is the amount of reserve? 75,000. So nothing will be transferred to partners' capital accounts because whatever reserve we have created, the whole has been transferred to realization account. Clear? Now the fourth case. Fourth case is amount of liability is greater than workmen compensation reserve. That means if you have a workmen compensation reserve of say 75,000, but your liability during the year towards the workers comes to 90,000, then what will be the journal entry? The journal entry will be whatever reserve we are having. We have to basically close down first the reserves. That is what all the items that are appearing in the balance sheet to realization account. Now what will be the amount? 75,000 or 90,000? This amount will be 75,000 because we have to close the reserves first. And while closing, the amount of reserve we have is 75,000 only. There is a liability to pay 90,000, but what we are doing in the realization account is we are closing down our assets and liabilities. Right? So what is the liability there? What is the reserve standing there? That is 75,000. Clear? So the whole amount of reserve will be transferred to realization account. Clear, friends? This workmen compensation reserve is clear. So we have the four cases. The first one is there is no liability against the workmen compensation reserve. In that case, the whole amount of reserve will be transferred to partners' capital accounts. Then if the amount of liability is less than workmen compensation reserve, the amount of liability will be transferred to realization account and the remaining reserve will be transferred to partners' capital accounts. Clear? Then amount of liability is equal to workmen compensation reserve. Then the whole amount of liability and reserve will be transferred to realization account. Then if the amount of liability is greater than reserve, then the whole amount of reserve will be transferred to realization account. Clear, friends? I hope this much is clear to you. Workmen compensation reserve. Clear? So what we have done is realization account, we talk of two things, assets and the liabilities. Clear? for assets, we say we transfer the assets to the realization account as soon as we realize that we are closing down the business and we have to sell our assets. Clear? And then the liabilities, outsider liabilities, we will be paying first according to section 48 of Indian Partnership Act 1932. Now friends, if we talk of realization account, we transfer the assets and liabilities to realization account before their sale. Before the assets are sold, we transfer them to realization account. Clear? What we consider is, as soon as we say that we are closing down the partnership firm and we have to sell the assets, we transfer the assets to realization and liabilities to realization account. We haven't sold the assets as of now. Clear? Now what you have done is you have transferred your assets to realization accounts, and now is the time to sell your assets. Right? Now what we say is realization of assets. Right? What is the first step? First step is you have transferred the assets to realization account. Right? Now from this realization account you will start selling your assets. Clear? Now when you will sell your assets, right, there can be three situations. A part, assets are sold for cash. Assets are sold for cash. Clear? Clear, friends? Now what will be the journal entry if you are selling the assets for cash? Your cash will come into your pocket. I will say cash account debit. Now what will be the credited, asset account or the realization account? Assets I have already credited by transferring them to realization account. I cannot credit the assets again. I have already transferred my assets to realization account. Assets I have closed down. Forget about the assets. Now you have the realization account only. So what I will say is cash to realization account. Right? Here you can make a note that assets have already been credited, right, to realization account. So we cannot credit the asset twice because we have already credited the assets while transferring to realization account. So now we will credit the realization account and not the asset account. Clear? This first case is clear. Second case is, so the second case is asset taken over by a partner. One of the partner decides to take over the asset. He says, give me this asset of the firm and adjust it from my capital account. What is the capital account? That is the liability, that is the payment towards the partner. He says, give me this asset and whatever is the value of asset, you deduct it from my capital account. So what you will do is, you will debit the partner's capital account. And what you will credit, asset account or the realization account? Asset account is already credited when you have transferred the assets to realization account. So here I will say to realization account. Clear, friends? One of the partner decides to take the assets while dissolution, and he say whatever is the amount of asset, you adjust it from my capital account. Because what will the capital account reflect? Capital account reflects the amount that is payable to the concerned partner, and if we debit the partner's capital account, the amount payable to partner will reduce. Clear? Clear, friends? Now, what is the third case? Third case is you give your asset to your creditor and settle his dues. Right? Now you are moving from a rented accommodation to a fully furnished home. You have the certain payments to be made while you are leaving the rented accommodation. Right? That is what I have told you. You have to make certain payments when you are leaving the rented accommodation. Like you have to pay the rent to the landlord. You have to pay to your maid. Now your amount due towards your maid was rupees 4,000. Right? Your amount due towards your maid was rupees 4,000. What you do is, instead of giving her 4,000, you give her the microwave. You ask her to take the microwave, right, in the settlement of her dues of rupees 4,000. This is what we are doing here. We have to pay a creditor a certain amount. Instead of giving him the cash, we ask him to take our asset, right? We do not sell that asset in the market. We ask our creditor to take that asset in the settlement of his dues. Clear, friends? What will be the entry in this case? You are giving the asset to a creditor, your asset will reduce and your creditors will also reduce. Your liabilities will be debited and assets will be credited. You have already done that in the realization account. In the normal case, what will be the journal entry? The journal entry will be creditor account debit to asset account. Isn't it? This will be your journal entry. But in this case, if you see, you have already debited the liability to the realization account and you have already credited the asset to the realization account. Why will you again debit the liability, again credit the asset? Because you have already done that while transferring it to realization account. So in this case, this entry will not be passed. There will be no entry. Write down the note here. Creditors are already debited and assets are already credited while transferring them to realization account. Clear, friends? So now we say that in case we give the asset to the creditors and we are not selling the asset in the market, in that case there will be no entry, right? There is a transfer of asset to settle the liabilities. We have already debited the creditors, we have already credited the assets. Why we will do it twice? So there will be no entry in this case. So the three cases are clear related to realization of assets. First, you will transfer the assets to the realization account. As soon as you think that you are closing down the business and you have to sell those assets, you have to just transfer those assets to realization account. You close the assets account. Clear? Then these assets, then you go to the market and sell those assets. Clear? First of all, what you will do is you will collect all the assets at one place. Right? That one place is known as a realization account. Then you will take that one place to the market. Right? You will take one carton where you have kept all the assets. You will take that carton to the market and sell the assets. That carton is known as realization account. So if the assets are sold for cash, we will take the cash and put it in the carton. So cash to realization, carton is gone from us, cash coming inside. Assets taken over by partner, if one of the partner takes over your carton, then we will say partner's capital accounts to realization account. If one of your creditors take your carton, if your mate takes your microwave, right, then in that case there will be no journal entry. Clear, friends? So this is about realization of assets, right? Now talking of liabilities, in the realization we talk about two things, assets and liabilities. Now the second part in this is settlement of liabilities. Right? In the realization account, what you have done is you have collected all the liabilities at one place. Right? Now you are going to settle those liabilities. Now on first is payment of liabilities in cash. Right? Payment of liabilities in cash, then we will say realization account debit to cash or bank account. Because the liabilities have already been debited to realization account, now here we will debit the realization account. Second case is if partner agrees to settle a liability. If one of the partners says that I will pay that liability, right, I will pay that liability, then what will be the journal entry? Realization account debit to partners capital accounts. Absolutely reverse entries to what we have done in assets. Right? If the liabilities are the payment of liabilities is in cash, then the journal entry will be realization to cash or bank account. If one of the partner agrees to settle a liability, then we will say realization account debit to partners capital accounts. Clear, friends? Clear? I hope this much is clear to you. First of all, what we are doing is we are transferring our assets and liabilities to realization account. This is like when you are moving from a rented accommodation and you know you have to sell your assets. What you do is you collect all your assets and put it in one carton. That one carton is a realization account. Clear? Then what you will take is when you go to sell the assets, when you go to realize money from the assets, you will take that carton. We will take realization account. Forget about the assets. then only the realization account will be debited or credited, right, in case of assets and liabilities. Clear this much? Clear, friends? Now, one more thing here we have is, one more thing that we are going to discuss here is, we have one more topic, that is unrecorded assets, unrecorded assets and liabilities. Right? What are these? This means assets and liabilities do exist, but these are not appearing in the books. These are not appearing in the books. Clear? That is, the assets and liabilities do exist, but these are not appearing in the books. Now, what will be the accounting treatment of that? What will be the accounting treatment? These will not be directly, first point, these assets and liabilities, these assets and liabilities are not transferred to realization account. Right? Then we have closed down our balance sheet, we have closed down our assets and liabilities. Then what we have is, what we say is, if anything is realized, if any amount is realized from these assets, right, then the journal entry will be cash or bank account debit to realization account. Why realization account? Because we have already closed our assets and liabilities account. We have closed our balance sheet. So we will do all the adjustments through realization account. These assets will directly not be taken to realization account. If there is any amount realized, then the journal entry will be cash bank to realization. Then third point, if any partner decides to take over these assets, then the journal entry will be partners capital accounts debit to realization account. Clear, friends? Then fourth case, unrecorded liability is paid. Then the journal entry will be realization account debit to cash or bank account. Similar to the entries what we have done in settlement of assets and liabilities. Realization of assets and settlement of liabilities. Liability taken by partner. Then the journal entry will be realization account debit to partners capital accounts. Clear, friends? If while dissolution there comes to your notice that you have some unrecorded assets and liabilities, then what will be the accounting treatment of those assets and liabilities? You forgot to record some assets and liabilities in the books. Now they are not in your books. These are unrecorded assets and liabilities. These assets and liabilities will not be transferred to realization account. First rule. Second is, if anything is received from the sale of these assets, we will record the entry as we have done in realization of assets. Then all the cases are similar to what we have done in realization of assets and settlement of liabilities. Clear, friends? Now I hope you are clear about assets and liabilities, how we are dealing with assets and how we are dealing with liabilities, right? So if you have any queries, just send me an email at ksjteaching@gmail.com. Clear? In the next lecture, we'll talk about the dissolution expenses, accounting treatment of dissolution, or I can say realization expenses. Now what is this? What is the accounting treatment? We'll discuss in the next lecture. So that's all for this lecture, friends. Thank you so much.